Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 4th of June, 2020. Thanks for joining us on another glorious day here in Chicago. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And this is episode number 1769 as we make our way towards 1800. Not that that matters, but interesting nonetheless. This morning, risk-off sentiment across the board. You have gold leading the pack, up $18.90, trading at 17.23 in the August contract. That's the front month currently, up 1.11%. Crude is off 1.39%, off 52 cents, trading at 36.77. Followed by the Russell, which is the weakest of the indices. The Russell's off 0.86%, DAX off 0.77%, the Eurostoxx off 0.64%, the S&P 500 off 0.52% or 16 points. The Nasdaq is the strongest of the indices. The bonds are up just 2 ticks, and the 10-year notes, which are trading September, in case you didn't know, U.S. Treasuries rolled to September contracts, the U0, U20 contract last week. You should be looking at September at this point. And that's where we stand. So overall, just an indication that the market is in a risk-off sentiment after rallying yesterday, and that's where we stand. A lot on deck today. In terms of releases, we did get the ECB rate decision. The rate remains at 0%. Marginal lending rate remains at 25 basis points, and the deposit facility rate is at negative 50 basis points. We did see the initial claims come in at 1.877%, 1.877 million. Prior was 2.126 million. The expectation is for 1.8 million, so it came in slightly worse than forecasts and consensus, but overall better than what we've seen over the last few weeks, of course. And then the only thing remaining on the calendar of any significance is the Great Britain GfK consumer confidence. Final for May expected at 7:01 p.m. Eastern U.S. time, expecting negative 34. UK EU Brexit talks take place today. So not much else to look at in terms of drivers here. The overall market is looking for OPEC Plus, which says it may meet over oil cuts this week if the laggards agree to comply. So they're looking at Iraq for compliance. Also, China eases flight curbs after the United States targets its carriers. And overall, the European session saw some selling as the focus was the European Central Bank meeting. Policymakers were expected to provide more aid for the battered Eurozone economy. So that's where we stand in the big picture. Let's take a look at what we expected yesterday in our review segment. Yesterday, we were opening in a gap. We're looking at the market opening at around 3,100. The expectation was for an open auction that breaks higher, takes out the overnight high into 3105, potentially 3108. That zone, the 0508 area is expected to be the primary resistance for yesterday's session. I expected that we were likely to rotate down as I was seeing signs, as I outlined here. I was seeing signs that the buyers were somewhat exhausted. This big rally on the close the day before, ended up with a delta that was still negative on a lot of volume. And to me, it looked like buyers were running out of steam based on the volume delta. And so the expectation is we would poke through that overnight high, push into 3105 to 08, and then pull back to 3090, consolidate at the 3090, and then potentially rally back up to the open into the close. That's the primary scenario. Here's what actually happened. What actually happened is we had our open auction. We did push the 3105 area, the primary resistance, 3105, 3108. And then we rotated down to 3096 to put in what was a very clean and very beautiful open auction out of range opening swing. So the market opened, tested up. We found sellers at 3105.50, pushed down, found buyers at 3096 even, and pushed back up through the close, through the mid and VWAP, and then consolidated until it poked through the opening swing high. Once it poked through the opening swing high, it pulled back to our very familiar area. I mean, come on, if you've been watching these trader bites for a while, you know by now that we're watching the mid and the VWAP, and when they stack, it means something a lot of the time, not always, depending on the context. But here we are, pull back to the mid, and then we start to get a little bit of liftoff. What it didn't do is push down into the 3090, which is this thick zone here. It did not bother to attempt to rotate down with the gap mid 3087. 88 or so. 3088 was a gap mid. So I was looking for 3090 test, and it just did not show up. And instead, the market pulled back to this mid, which personally, it was really tough to see a zipper with a tag of the mid and then a launch off. That leaves us with confluence at the mid up higher, with the stock zone at 3105, 3106, and the IB high VWAP all in the same place. So I would have loved to have a pullback right in here for another stab along for the next rotation. Since we tested this area, I was looking for the next big area up, 3126 or so. So this is what we're after. And then at the close, we ended up pulling back to this high that we put in midday. We pulled back in what was a very odd profile in that the IB was quite small. So the first hour had so little action, despite the fact that we had gapped up on a rally above 3100. Above 3100, there was just no interest in pushing this market for about an hour, which gave us a relatively unusually tight IB of 10.5 points. And what we did is we multiplied the IB threefold to the high in what was a multi-distribution profile. You can see this profile, multi-distribution profile. So there's a lot of battling here, and the volume was actually pretty good. I'm reading yesterday's action as quite confusing in terms of what the intent is. Clearly, the market facilitated trading to the buy side more easily than the sell side, but I'm starting to see cracks in the fuselage here for this rocket, and it seems to be kind of showing signs that it's already done. It has tested as far as it could on the upside, almost 3130, with a big gap below. And if we look at the 15-minute here, let's start off the stock zone areas and turn on the master levels. We've left quite a few gaps down below. I mean, we have the gray areas are gap zones. There's a gap zone there. There's a gap zone there. There's a gap zone there. And these are gap zones highlight incomplete auctions. And so to me, it just seems to be running, getting ahead of itself in some ways, not because of a macroeconomic kind of perspective about how, the economy is doing and jobs and so on. Just from a technical perspective, it seems to be kind of getting ahead of itself. And if today it does not hold the point of control above, which was yesterday's point of control is at 31.13 and a half, 31.13 and a half, which happens to be a composite high volume node, if it does not hold that price up there, let me turn off the master levels to get a cleaner picture. So if we go back here, and we are currently right here, if it does not take out this high volume node right here, then we are likely to fill the gap and start rotating back down to 78, 76, 68 area and fill the gap that we left behind yesterday. So that's what I'm seeing. You know, again, you can tell that the market is pushing higher, but not getting the full benefit of the delta here in terms of buying. And the other caveat is next Thursday, June 11th, we have rollover. We actually start moving to the September contract. So starting Thursday of next week, we lose the benefit of the volume delta for a week because spreaders start coming in, calendar spreads start coming in, and positions start to become start to roll from the June to the September contract, long or short, and so the volume starts to get iffy. It'll increase, but reading that volume is probably off limits until the following Wednesday, the expiration Wednesday, the 17th. Expiration of Quad Witching Friday is the 19th this month. So between the 11th, which is the official rollover day of the indices, the US indices, and the 17th, we are kind of flying without a delta, kind of like flying at night without instruments. All you can do is look out the window and guess at where things are. So this is I'd like to see this move happen today. The rotation down to clean up the auction a little bit below because we have big segments of unauctioned areas, and then we'll see how that goes. Now let's look at Bookmap here. Here's CT Bookmap. You can find this at ctbookmap.pro. Bookmap overall is showing pretty decent price discovery overnight. There was a lot of liquidity overnight. We didn't get like the usual big blank areas. Oops, big blank areas. We did have some liquidity in the overnight session that traded out. You know, especially to the downside here, we saw liquidity come in on the first test down at night last night during the Asian session, and then we saw liquidity just build up and really trade out on the way down. And it seems like the market is having a hard time taking out its most recent highs. It keeps putting in these recent highs and not able to get back up there. And a lot of the liquidity, the resting liquidity in the market, is on the bid, which further supports the potential. Now, this is not a scientific thing here, reading order flow. It shows that the main expectation. I don't want to get into it too much here. My philosophy on how liquidity works in the book, but for those of you who are interested in order flow might find this interesting in that, you know, the old adage that the market moves to size is really the science. It's not science, but it's really the likely to be the result of money that's already been committed, trades that have already taken place. And those people, you know, in general, when we trade, right, as day traders, investors, and so on, we enter at market or we enter with a limit order. But in general, if you're big, you're not entering with a limit order. You're not putting 10,000 offered to get filled on 10,000. You're working an iceberg, which is basically a market order, or you're breaking up the trade and getting in at market. So we don't see the entry side. We just see the execution in the form of ticks, prints, things like that. But then as soon as we get in, we generally put in our targets and our stops and things like that. Stops are also market stops, so we don't see those. But targets show up, and so there's a tendency to put your bid out based on the position that you're holding, to put your bid out for your exit, because that's the expected area that the market is likely to go. And so when I look at the liquidity above and below the market, I'm considering that as it when it's heavy on the bid, positions are taken. Believe the old adage, which I've watched many, many times happen, that market moves towards size. It's because the size that's in the market is smart money that's really working exits, limit orders, and we get to see those. We don't see the entries. Anyway, or we don't see the intent, we see the actual entry. Anyway, so that's what we have. We have pretty decent liquidity down below 30.90 from yesterday, again in play on top of this stock zone in the middle of the gap zone. That's the key area below that we didn't test yesterday. We're testing, and any push up is likely to take us through 31.30 and higher. I want to just remind everyone that we do I am hosting a webinar with the small exchange next Tuesday at 4:30 Eastern, Tuesday, June 9th at 4:30 Eastern. The link is, I just put the link into the YouTube live chat, and you'll find it in my Twitter feed as well. And if you're on our list, you've already received an email and you'll receive a reminder. We'll have the folks who started this small exchange on for a panel, and we'll have plenty of time for Q&A for members to speak directly with the exchange. You rarely get a chance to speak directly with the exchange, and here we are hosting them. This is being hosted by edgeclear.com. I'll be on this webinar, and I'm hoping that you will register and join. So let's take a look at what's expected for today. Okay, so actually, before I get into this real quick, here's the overnight session. Not much to talk about here. We saw it in the in Bookmap, staying below mid, remaining below mid even on the ECB announcement and all that stuff, and is really it's left a bit of an excess high, and is somewhat B-shaped, but really balanced. And again, if it stays below yesterday's point of control at 13, I'm expecting that we are likely to continue to explore lower, 30.90 and 30.70, 30.78 and 68 are likely to be next. Okay. So what are we expecting for today? The trade of the day, or the big trades of the day, big scenarios, we're opening right on top of the overnight point of control. I'm expecting it to hold steady, become responsive into this 13, get tangled up, push maybe as far as the 16, 17 area, but I'm looking for this to roll over and attack the overnight low, and then start working its way down through the gap zone. You can see the gap zone is at 30.87 and a quarter or so. I'm expecting it to push down into this area, and if it's not able to bounce here, I'm going to draw this dashed, then it's likely to push through to 78, this 78 down here to fill the gap, and that closes this big unauctioned area, low volume node area. This was a big area on the way down on the COVID-19 move from early March, and we have skipped through it, and we're likely to trade it today. Scenario 2, if we do not get the push down, so we open up and we start to drift lower, if we get an impulse up, we're likely to get tangled into the open for a bit, push up into the 13, and then start to squeeze the shorts yet again into 17, consolidate, and then start to move back up to yesterday's high. I find yesterday's high to be in excess, so if it does check or take out yesterday's high, it is likely not to have a lot of steam to continue, in my opinion. Seeing a lot of signs that this the participation in the auction on the way up is faltering, is wavering, and it is not likely to continue through. So I'm favoring the short side, but this does not mean, this is not a recommendation to trade. It does not mean that all you do today is look for short trades. Look at the behavior of the market as it moves up, and if it looks like it is struggling to continue higher, that sets us up, pre-identify your area that you're going to lean against, and then look to put on your short and obey your stop. Obey your stop as you're trading. It looks like we're having a bit of an impulse higher just now. If we look at the volume scope, we're having a bit of an impulse higher into the overnight VWAP. We have the overnight mid just above at 31.10, and then we have yesterday's point of control at 31.13. So this actually sets up this impulse up on high delta that we're seeing currently. This actually may set up an inside bar in here, and then a continuation trade into that 13 to set up the short for the way back. And on the way back, we would be looking at this 3105, the 3100, and then the 3097 and 3090 as scale out areas. That's the trade setup with a 4.5 point stop. Okay. So again, not a trade recommendation. I'm just sharing with you how I look at things. Again, please register for the webinar with the small exchange, and it's in just a few days on Tuesday. If you have any questions, just go to edgeclear.com and hit the chat widget, and a human being will respond there. Also, if you call the number, a human being will respond there as well, and some of the best in the business, in my opinion. Good luck, and I'll catch you tomorrow. Take care.